You ever notice how one candle can flip the entire mood of the crypto market? This is more dangerous than you might think. Just look at what happened when Bitcoin's price fluctuated over the last little while. On August 1st, Bitcoin dropped around 3% in the day, far from what you would call a price crash. But you'd think the sky was falling based on headlines. All of these titles paint a negative picture on Bitcoin. Falling back to low levels, arrows pointing down to indicate a downtrend, saying that crypto is wobbling into August. And then tying this to a news update like tariffs enabling risk-off behavior. In other words, bearish news for crypto. And then a few days later, Bitcoin pushes up a tiny bit in the day and suddenly the narrative is flipped. Headlines claiming a Bitcoin rally is taking place, saying that Bitcoin is advancing and calling this a price jump. And again, tying this back to some sort of news or event that paints a bullish picture. The crazy part is, within this short period of a few days, these price fluctuations took place in a higher trading range we've never seen before. Less than a year ago, everyone in the crypto space was dreaming about Bitcoin going above 100K. This also happens with altcoins. Major names calling the market movements a crypto slump when the assets in question are setting records as we speak. So we can see that headlines tend to exaggerate small market movements. And this can have a ripple effect on the wider population, especially those that are new to crypto or aren't in the crypto space full time. It's also easy to start making poor decisions because of these headlines. Panic selling on red days, FOMO buying on green days, and getting burned out over and over. 2 cycles ago, I remember falling into this emotional trap myself. One day thinking the market is gonna fly, and then the next day feeling scared that my portfolio is about to bleed out. And even now, I have friends and family randomly ask me if I'm okay, just because Bitcoin fell a few $1,000s. Meanwhile, I know that Bitcoin is up more than 100% over the last year and 8x up from 2022. And this brings up a good point. When you zoom in too much, the noise starts to drown out the bigger picture, which is why we need to take a step back and find more effective ways to assess the market. So how do we do this? What's the best way to assess what's going on with the crypto market? Well, if you've been following crypto content on YouTube and X, you're probably familiar with several tools and methods. 2 common ones are measuring Bitcoin dominance and looking at Bitcoin's past cycles to see if we're following the same 4-year pattern we saw before. And I've looked into these many times for my own analysis. But this is just a small fraction of the tools out there. I've come across several different indicators over the years. Some of these insights I rarely see mentioned, yet they've helped me understand broader market cycles with much more confidence. Look, we can't predict everything. Black swan events and macro shifts can always blindside us, but we can still build a toolkit of signals and metrics that cut through the noise and give us a better sense of where we are and where we might be headed. In this video, I'm going to walk you through 6 data points and metrics I personally use to make sense of the crypto market, and I intend on having these by my side through the rest of the cycle. And along with these metrics, I also made sure to narrow down the list of platforms I use for all my crypto trading. And WEEX is currently one of my top go-tos, not just for spot buying and selling, but also for futures trading. They offer all the tools you need, and their user interface is really easy to navigate. Sign up for free using the link down below, and you'll get 30% off your trading fees. And to stay up to date with the crypto landscape, you can check out the FireHustle Discord group. It's where I go to keep up with the real-time updates, market shifts, and strategies that have been working for me. Whether you're actively trading or just navigating this space long-term, being part of a strong, informed community helps you move with more confidence. If you're interested in learning more, you can find the link down below. As always, none of what I share is financial advice. Please make sure to do your own research before making any financial decision. Now hit those like and subscribe buttons, turn on post notifications, and let's get started. So there are countless ways to analyze the crypto market, but these can be divided into 2 main categories. First, you have macro factors that operate outside of the crypto space, things going on in the real world that can influence the market. Then you have metrics and indicators that can be used to directly assess how the market is behaving. Both are important, and together this can give us a better picture of what's going on and where we might be headed next. Let's start with one of the most important macro factors: global liquidity, the M2 money supply. History has shown that when M2 rises, it eventually fuels upside in risk assets like Bitcoin. It basically is the tide that lifts all boats, and crypto often rides that wave harder than anything else. Right now, we're seeing M2 continue to climb up, which means global liquidity is on the rise. This is in line with several countries around the world printing money as we speak. Now, what we've been seeing over the last few years is a correlation between M2 and Bitcoin. When M2 pushes up, hits a peak, and it cools down, Bitcoin follows. But it seems to happen after a 2 to 3 month delay. And when you see the M2 chart shifted by 10 weeks, you'll see these peaks start to align. If you look at what's happening right now with M2, this tells me Bitcoin still has some room to push up. One more thing to mention here is the rate of M2 growth, shown by the green areas on the chart. And clearly the largest green areas line up with the biggest climbs for Bitcoin's price in past cycles. This tells us that when money supply goes through a period of high growth, this eventually fuels the biggest climb for Bitcoin, leading to the peak. And right now, this growth rate is still relatively low, but ramping up. Another external factor that I'm watching closely is the US dollar index, or DXY. This basically measures the strength of the US dollar against a basket of major currencies like the euro, yen, and pound. And what's interesting is if you compare the movement of DXY to Bitcoin, they seem to have an inverse relationship. So when the US dollar gets stronger, Bitcoin trends down. And we saw that the strongest climbs for DXY line up with Bitcoin falling into bear market lows. And when the strength of the US dollar drops suddenly, this lines up with Bitcoin entering a major climb. And the reason for this relationship is simple. When the US dollar is weaker, investors tend to seek out alternative assets that aren't tied to the US dollar, like Bitcoin and other altcoins. And of course, the opposite is true. When the US dollar gains strength, investors head back towards US dollar-based assets like stocks and bonds. Right now, you can see that the DXY chart has been on a downtrend since January, and after a few months, Bitcoin began the major push back into the 100K territory, and it's remained up here since then. Seeing this fall even lower from here should be a signal that more investors are turning towards Bitcoin and crypto. Now, while M2 and DXY are external factors that influence Bitcoin's movement, I also like to study the Bitcoin price chart directly using a few key indicators. This helps me get a sense of market sentiment and trends. And this applies to any altcoin price chart. MACD and RSI are two that I find essential for helping confirm strong movements and spotting potential reversals. If you look at Bitcoin's daily chart, some of the biggest rallies over the last few cycles began when RSI pushed above 70 and stayed elevated for several weeks. At the same time, the MACD showed momentum. Green histogram bars and the blue line crossing above the orange signal line. This combination has consistently marked the start of new, higher trading ranges. And because of how fast things can change in the market, it's important to be able to make moves on the go, if needed. Having a quick and reliable platform to adjust your portfolio is a must, and WEEX is one that's worked well for me so far. Try it out for free with the link down below, and you'll get a chance to unlock up to 30,000 USDT in rewards. Just about a month ago, we saw this setup again. RSI broke above 70, MACD flipped bullish, and shortly after, Bitcoin hit a new all-time high over 120K. But this time, RSI didn't stay elevated for long. It dipped below 70 just after a week. The MACD histogram also turned red, signaling weakening momentum. Interestingly, we saw something similar at the tail end of the 2021 bull run. RSI spiked, dropped, and MACD quickly turned bearish. Yet Bitcoin still pushed higher, but in short bursts. Instead of one long surge, momentum came in waves. That same behavior may be repeating now as sentiment also shifts in the real world. And honestly, that's a good thing. Price charts shouldn't just move straight up. These cooldowns between pushes are signs of a healthier, more sustainable uptrend. And there's another thing I always look out for. Signs that retail is back in. Because when everyday investors start flooding in, that usually signals we're entering the later stages of a cycle. So what does that look like? Well, you'll start seeing crypto-related search terms spiking on Google Trends. You'll see crypto apps like Coinbase, Binance, and Crypto.com climbing the charts on the App Store. News outlet channels that normally ignore crypto start featuring Bitcoin on their front pages. And YouTube? Well, suddenly YouTube is filled with all kinds of ridiculous hype videos and stories of overnight millionaires. But right now, we're not really seeing any of that. Google Trends for terms like crypto is still well below the levels we saw in 2021. Some crypto apps are ranking in the finance category, but most aren't breaking into the top 100. Last bull cycle, these apps are crushing the charts overall, not just in the finance sector. And the general media hasn't really latched onto this cycle yet. Maybe a few mentions of Bitcoin reaching a new high, but we need to see this become a main topic of discussion. That tells me retail still hasn't arrived in full force. A sign that we have more time for this bull run to take shape. You'll know we're coming close when your non-crypto friends start asking you about buying crypto. The truth is, crypto will always be a space filled with noise. Headlines flipping back and forth, charts spiking and dipping, and emotions running high. But once you zoom out and learn to focus on the right signals, the chaos starts to make more sense. That's how I like to view the crypto market. Tuning out the daily drama and paying attention to the deeper shifts happening beneath the surface. From macro liquidity to momentum signals, from price corrections to the absence of retail mania, the signs are all there. This all points to the market still being in a build-up phase. The foundation is forming, and while the crowd may still be asleep, the opportunity is wide awake. Now, these aren't the only metrics and indicators on my list. If you want more tools to add to your toolkit, aside from what I've shared, then let me know and I'll make a follow-up video with more points of analysis. You can also check out the FireHustle Discord group to gain high-level insights and learn more strategies that can help you assess the market. Staying in the loop will be the key to being ahead of the curve in crypto. I myself learn a lot from this community as well. Link is in the description below if you're interested. As always, none of what I share is financial advice. Please always do your own research before making any financial decisions. Don't forget to leave a thumbs up and subscribe to the channel. Hope you guys enjoyed the video, and I'll see you in the next one.